As we embark on a new year, the quest for the most promising investment opportunities brings us to the forefront of innovation and growth. In this meticulously curated list, we delve deep into the realms of technology and automotive industries, spotlighting 5 stocks that are poised to redefine the market landscape in 2024. But before we do that, subscribe to our channel $1 World for regular stock market updates. Leading the charge is Nvidia, a titan in the semiconductor sector, known for its groundbreaking advancements in graphics and AI technologies. Tesla, the trailblazer in electric vehicles, continues to redefine mobility and sustainability, making it a compelling choice for forward-thinking investors. SOFI, with its disruptive approach in the financial sector, offers a fresh perspective on fintech innovations. Rivian, emerging as a strong contender in the EV market, promises a blend of robust performance and eco-friendly technology. Lastly, NIO's vision in the EV sphere, particularly in the Chinese market, showcases its potential as a key player in the global transition to sustainable transportation. Dive into a comprehensive analysis and discover why these stocks are top picks for 2024. Starting off with Nvidia has experienced a remarkable 235% surge in stock price since the start of the year, buoyed by its transformation from a gaming-focused company to a leading supplier of AI chips. This shift has been driven by an explosion in demand for AI applications, reinforcing Nvidia's position in the data center chip market. The AI market, valued at $137 billion in 2022, is projected to grow at a compound annual rate of 37% until 2030, potentially exceeding $1 trillion. Nvidia, with an estimated 90% market share in AI GPUs, stands to benefit significantly from this growth, despite emerging competition from companies like AMD and Intel. Nvidia's strong financial performance underscores its market position. The company's free cash flow has soared from $5 billion to over $17 billion this year, while its competitors face financial challenges. In the fiscal third quarter of 2024, Nvidia reported a 206% increase in revenue to $18 billion and a staggering 1,600% increase in operating income to $10 billion. This growth is largely attributed to a 279% rise in data center revenue, amounting to $14 billion, driven by robust AI chip sales. The stock's future prospects remain bright. Although replicating this year's dramatic stock price increase may be challenging, forecasts suggest significant growth potential. Analysts predict Nvidia's earnings could reach nearly $24 per share by fiscal 2026. Based on the current forward price-to-earnings ratio, this could translate to a stock price of $1,080, indicating a potential 120% gain over the next 2 years. Given these projections and the company's dominant market position, Nvidia represents a compelling investment opportunity, offering the potential for substantial returns in the coming years. Second on the list is Tesla, the world's largest automaker by market capitalization, is facing increasing scrutiny despite its history of defying critics and achieving 4 consecutive years of GAAP profitability. However, several factors are raising concerns about the company's future prospects. A primary issue is Tesla's pricing strategy. At the annual shareholder meeting, CEO Elon Musk indicated that pricing is driven by demand. Recent price cuts across various models 3, S, X, and Y, were initially thought to be due to production efficiencies. However, it appears that weaker demand, intensifying competition, and rising inventory levels are the real reasons behind the more aggressive pricing. This strategy shift has significantly impacted Tesla's operating margin, which has dropped to 7.6% from 17.2% over the past year. Another challenge for Tesla is its struggle to differentiate itself beyond being a traditional car company. While it does generate profit from its energy generation, storage, and services segments, these are relatively low margin compared to its main EV business. The company's profitability heavily relies on selling and leasing EVs, but rising inventory levels and a dependence on possibly unsustainable sources of pre-tax income are concerning. Moreover, CEO Elon Musk's public persona and management style have become points of contention. Musk has been the focus of securities regulators on several occasions and has a reputation for over-promising and under-delivering on new innovations and EVs. This behavior is problematic for investors, especially given Tesla's high valuation of 66x forward earnings, significantly above the industry average of about 10x. After Tesla and Nvidia, we'll take a quick look at SOFI. SOFI Technologies has experienced a significant upswing, with its stock value increasing by 111% as of December 22, an impressive feat in the context of rising interest rates in the US. This digital banking company's future presents a mix of promising opportunities and potential challenges for investors. On the positive side, SOFI's innovative online-only banking model stands out in the industry, offering a superior customer experience and challenging traditional banking norms. This approach has paid off, as evidenced by a 35% increase in net revenue in the first 9 months of 2023, showcasing robust growth amidst economic headwinds. Additionally, SOFI's strategy of targeting both high-income and younger customers is aimed at fostering long-term banking relationships that can be lucrative over time. The company is also on the cusp of achieving its first GAAP profit, signaling a significant financial turning point. However, there are risk factors to consider. SOFI operates in a highly competitive market, and despite its digital edge, it faces stiff competition from major financial institutions that are also investing heavily in digital capabilities. Furthermore, with only about 12 years of operational history, SOFI lacks a long and consistent track record of profitability, which could be concerning in the event of an economic downturn. A notable risk in its portfolio is the heavy reliance on personal loans, which could lead to higher defaults if borrowers face financial difficulties. While the positive aspects of SOFI are compelling, these risks suggest that starting with a small investment in the company might be a prudent approach for those considering adding it to their portfolio. Enjoying the video so far? Be sure to join our Discord community to connect with other like-minded investors. Coming back to our top stocks, Rivian Automotive, known for its high-end electric vehicles like the R1T truck and R1S SUV, is poised to weather potential market shifts in the EV sector. As Tesla faces changes to the federal EV tax credit eligibility for its Model 3 in 2024, Rivian's distinct market positioning may shield it from immediate impacts. Unlike Tesla's Model 3, most of Rivian's models, which start at around $78,000, do not directly compete with Tesla's more affordable offerings. This differentiation has allowed Rivian to avoid the ongoing price wars in the EV industry. However, Tesla's pricing strategies and the broader market dynamics could still influence Rivian, especially with Tesla's upcoming Cybertruck. This vehicle is more directly in competition with Rivian's models, and any price changes here could affect Rivian's momentum. Despite these potential challenges, Rivian is entering 2024 with significant momentum. The company has recently launched a leasing program, secured a deal to supply electric vans to AT&T, expanding beyond its initial exclusive arrangement with Amazon, and has shown improvements in production, deliveries, and the gross profit per unit. Rivian is on track to achieve gross profit positivity in 2024. On the other side, Tesla's Model 3 losing its $7,500 tax credit eligibility for most trims under new battery sourcing rules may prompt Tesla to adjust its pricing to sustain demand. Historically, Tesla has been responsive to market changes, often altering prices to support sales. Given that the effective price of Model 3 with the tax credit was just under $35,000, a critical point for many EV buyers, Tesla might aim to keep the Model 3 below this threshold to maintain its appeal. Last but not least, let's talk about NIO. Shares of NIO have risen 13.8% in the past 4 weeks, closing the last session at $8.42. Wall Street analysts' short-term price targets suggest a potential upside, with a mean estimate of $11.96 indicating a 42% increase. The estimates range from $7.50 to $19.20, with a standard deviation of $4.25, reflecting significant variability in analysts' views. While the high end of these estimates suggests a 128% upside, the lowest points to a 10.9% decline from the current level. The standard deviation is key here, as it highlights the range of opinions among analysts. A smaller standard deviation typically indicates a greater consensus. Despite the potential indicated by these price targets, relying solely on them for investment decisions is questionable. Analysts' price targets, often influenced by business relationships or interests, may not always accurately predict stock movements. Research suggests that these targets can be misleading more often than informative. However, the consensus on NIO's potential upside isn't solely based on price targets. Analysts also anticipate better than expected earnings for the company, which could still be a positive indicator. Still, while earnings estimate revisions are a useful tool, they don't provide a precise prediction of stock performance. Investors should approach price targets with skepticism, recognizing that while they can be a useful starting point for research, they should not be the sole basis for investment decisions. A thorough analysis of the company's fundamentals and market conditions is essential for informed investing. Remember that this is not financial advice, and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think this stock will make you rich or not in the comment section down below. Hit like and subscribe to our channel $1 World for more such penny stock videos, and we'll see you in the next one.